Welcome back to 7-minute options, just opening a few positions today. So the first one that I'm taking a look at here is Facebook. So I like to go about 40 days out. So I found this position here, 37 days to expiration. This is a typical $5 wide iron condor that I like to put on. So it's $5 wide on the put side and on the call side. Maximum risk is 500 minus the credit received. And I like to aim for the 0.2 deltas. So I'm picked out the 18 delta on the put side, the 19 delta on the call side, picking up about 130 in credit. See if I can get that one filled. And I might have to lower that by $1, maybe $2. So it might be like 128 or 129 by the time it gets filled, but that's fine. And the profit target for that will be about 50% if that gets filled. I think the second one that I looked at was EWZ. This is the Brazil ETF. I think I've put on several different positions on this one in the past, and they tend to work out okay. Here we go, 37 days to expiration. This is the monthly expiration cycle, same as the one in Facebook. And here I'm going to the 25 delta on the put, 25 delta on the call. It's a strangle, $504 in buying power, $3 in theta, 112 in credit. I'm going to try to open this one up. So both of these are just near the expected move. And again, the profit margin for this one is going to be 50% as well. And there isn't a whole lot else I can put on. I was looking at JP Morgan. Same thing, the September monthly expiration cycle, $5 wide iron condor. For JPM, I like to go 0.2 delta, so 17 delta on the put side and 22 delta on the call side, I think was the closest one that I found. Again, picking up $120 in credit for this one. And let's see if that gets filled. So that's 3 positions I'm opening today. And the profit margin I'm targeting for the JPM is also 50%. So just looking at these here, 120, EWZ, Facebook. Yes, Facebook's going for 120 right now. I'm going to lower that to 129. Trying to edge that towards closing. But I'm going to be playing with these, trying to get them closed for the next little bit. And that's it. Short video. Didn't really see any good earnings trades I can put on. Let me just adjust these for a second, and then I'll take a look at some earnings plays. I didn't see any good ones. One of the things that frightens me is I like to go for the J Lizard, right? Leave it unprotected on the put side and leave no risk on the call side, which means the credit I receive for the call spread and the put, naked put, is more than the width of the call, so that there's no risk on the upside. And it's been working well for me, but lately I've been struggling with it only because a lot of the earnings trades in the past few weeks have been negative, which means the stocks tend to drop after the earnings announcement. And that is not something that I want to deal with again after I get smacked around in pins. So if a lot of these tech earnings are disappointing and the market is just not happy with the earnings results, then and we're expecting a bit of a drop afterward, then obviously a J Lizard is not the ideal way to go. But let's take a look at that. Oh my goodness, JPM dropping on me like a stone here. All right, 118. Ay. Giving up all kinds of money here. All right, let's just leave that alone for a few minutes. That might fill. If I look at the earnings here, days to earnings. Yeah, so let's take a look at eBay, for example. All right, so eBay is reporting earnings today after the bell. And right now, yeah, so let's say 9 days out, we got 62% implied volatility. That should drop to about the high 30s, low 40s. If I look at this here, let's say I pick up the $64 put, which is a 24 delta, and I open up a, let's say, 72, 73 call spread. I pick up $116 of credit, so I have no risk on the upside. I would normally put this on. The only challenges I have is that typically lately, a lot of these tech stocks have been tanking on earnings. So if eBay goes down to 63, 62, then I'm in that position again where I'm going to start rolling out. Just to see how volatile this is at the moment, I need $1,000 of buying power to maintain this position, right? So if I open just a 64 put, I need, $959 of buying power. I only have 2,700 of buying power at the moment. That's not something I want to give up, especially if this thing starts dropping. This number is going to increase to 1,200 or even more, maybe 1,500 if eBay drops quite a bit after earnings. Normally, I wouldn't have a big issue with it, but lately these earnings have been dropping after the announcement, so not terribly excited. Looking at Target, so this could be interesting. They announced on August 18th, so that's still, what's the date today, like 11th. Yeah, so that's still a week away, so there's no need for me to rush that one. I can put that on next week. Flowers, August 12th, so that's tomorrow. Again, there's no weeklies here. I could look at this $9. I mean, the 46% IV could drop to the high 20s, low 30s here. But there just isn't a whole lot of money in this. I mean, my goodness, $20 for that one. And then $5 there, picking up $33. Complete waste of time. Not doing that. Cisco. So this could be interesting. August 18th. Again, I would be more like looking at the August 27th expiration here to give me some time after earnings. And I'd be looking at a 31% IV dropping to high 20s. Not much of an IV drop there. And OGN, again, doesn't have the weeklies and doesn't have a lot of money in here. So not a whole lot of good earnings plays here. But if you guys come across something, let me know. Here's the complete list on Tasty. I didn't really see any big earnings there that really piqued my curiosity. I mean, like Foot Locker, okay, August 20th, August 27th, the week after. The earnings announcement would be this expiration here. Yeah, in theory, I could pick up like the 52, 53. Let's say picking up the 53 there and then picking up like the 62, 63 there for 132 of credit. That's not that bad. I mean, it's Foot Locker. I mean, how volatile is it? It's probably not all that volatile. It's been range bound between 54 and 64 since May. So, you know what, Foot Locker, that might not be that bad, but I can wait until next week to put that one on. I don't have to rush it because it is going to move around between now and then. You can see it move down quite a bit. Now it's moving up quite a bit. So, again, not putting on any earnings trades, just opening up these three positions, which just don't want to fill. There you go. I'm offering one more than the medium price there. Offering one more than the medium price there. Offering one more than the medium price there. So I'm just waiting for these to fill. And I still have 35 minutes left before closing. So I think these will fill. If not, I might even have to nudge them up a bit. Anyway, we'll see how it goes. Thanks. Bye.